Hello traders, it's Samurai Trader here. Welcome to this session, day and swing trading for profit. In this particular session, I'm going to be focusing on how to train your brain for pattern recognition, and another very important subject, how to stay focused when you are trading. As day traders, at times we may be idle for an hour or two waiting for the setup, and as you know, we want the trade to come to us rather than us chasing the trade. And that's perhaps one of the greatest challenges for us as traders, is that as humans we tend to want to chase things. We're hunters. In this particular case, we need to sit back and wait for the trade to come to us. So I'm going to be showing you and discussing a couple of ideas for you. Now, it also leads into the little statement down here I've got from Aristotle: we are what we repeatedly do. Excellence then is an act, but a habit. So some of the ideas that I give you here, I'd recommend that you do them daily. Do them every time you trade. Develop the habit of marking up your charts, which is a big part of what we're going to be discussing today. Now on to the next slide. Now as we go into this slide, as always, my videos are raw, real and unedited. I may jump around a little bit, but it's very important that you approach watching really any training video, or it's really comes down to reading any blog or a book on trading or anything in life, to and asking ourselves, what can I learn from this? How can I use this? And even for the experienced traders, I know I'll be going through some very basic things with you. However, just that one idea may change your trading results. And as always, take notes. If you're new to my channel, you may not have seen one of these slides here, but over the years I've been taking comprehensive notes. I've been day trading now for 25 years, and I have I think at last count 32 of these spiral books here full of notes. As I trade, I take notes every day, and I learn something every single day. I promise you I learn something. Or when I go back and review my notes in these books, and that's the whole idea here, it may remind me of something that I've forgotten, because there are lots of little things when it comes to trading. And I become particularly inspired when I read biographies on, say, like the Pitbull, Marty Swartz, and other great traders who are worth hundreds of millions of dollars. And when you read about these guys, what you discover, and ladies, people like Linda Raschke, of course, sorry Linda, not forgetting you, is that they take notes, they review, they have their rules up on the walls. Marty, at one stage in an article I wrote, he has them handwritten and up on the wall in front of him just to review. So traders, very important we develop the habit of doing this. Extremely important. Now we've all heard of this statement: I trade what I see, not what I think, or trade what you see, not what you think. Now with this, that's easy to say but hard to do. In other words, it's very easy to make a blasé statement when it comes to trading, but of course the more evidence that you have that a pattern that perhaps you're about to trade is legitimate, that is, the easier it is to actually press the button to take the trade. Evidence defeats disbelief. Now, how do we develop a belief? We develop that through evidence and over a period of time. So some of what we're going to be discussing here is how to really develop that evidence and how to develop and enforce our beliefs that we have when it comes to trading. So as you can see, we've got a number of things we're going to be covering in this video. As always, I do need to put up the risk disclaimer. There is a risk in trading. If you haven't read this disclaimer, traders, please pause the video and read the disclaimer. Very quick advertisement: if you haven't obtained one of my training manuals, please download, click on the download link below, or visit my website where I've got two different manuals. I've got a general training manual, and I also have a manual, The Truth About Day Trading. And of course, if you haven't subscribed, don't worry traders, my ad's nearly over. If you haven't subscribed to my channel, please do. And once again, for $197, there is no upsell. There is no upsell. You get my indicators, my manuals, my setups. There's over 300 videos. There's and someone recently mentioned that my Google Drive, my training resources area, is like a gold mine. End of ad. Let's move on. So let's get into this. Elon Musk once said, I think it's possible for ordinary people to choose to be extraordinary. Traders, you can become extraordinary when it comes to trading, but you do need to roll up your sleeves and put the work into it. And that's perhaps one of the greatest challenges that I have in dealing with hundreds of traders. I've got over 2,000 members now, and a lot of traders, they join my program or buy someone's course and whatever, and they expect it to be a walk in the park. Yes, trading actually is easy. The setups are easy. So traders sometimes say to me, well, look, if it's so easy, why doesn't everyone make money? Well, the simple reason, traders, the easy things are also easy not to do. So really, it's about developing the right habit. Now, where I want to take you in helping you master, as your coach, in helping you master the art of day trading is this. For members watching this, I've actually just uploaded today into the members area. It's under new recordings and new downloads. It's in that folder. I've actually uploaded the PDF of this book, which I got openly off the internet, so anyone can go and Google this for Malcolm's book called Blink. Now, some may think, well, how is this book relevant to us as day and swing traders? Well, I think a key point out of this book, traders, is this: our best decisions are made many times, and actually I've repeated a word there. Many times made. That is right. Sorry, I'm getting myself confused here. Our best decisions are many times made in a blink of an eye, and we want to, as traders, develop what we call reflex action. That is, we see a trade set up, we know it works, we've got the statistics on our side, and of course we pull the trigger, we make the trade. And traders, I'm just doing in the middle of a trade now. I'm just going to pause this. I'll show you this trade in a moment. It was too late. I was about to go to break even. It was 6 ticks on CL. We'll have a quick look at it in a moment. And just 5 contracts, so not a big trade, but 5 contracts on CL. And I had it going at the same time. It was quite slow. I'm recording this during the Globex session, and it was the high of the day. It ticked up plus 5 ticks, and it was time to go to break even plus 1. So I was about to do that, and it was filled, which is good anyway. So look, the power of thinking without thinking, that is learning to and mastering our setups in a blink of an eye. And you've heard me talk about this a great deal, is you really want to master only 2 or 3 setups before you move on. You want to own those setups. It's very, very easy to confuse ourselves as new traders, and so really that's a little bit of what we're about to cover and talk about. So let's just go back to this here. So getting back to the point here, I'm going to quickly show you some charts in a moment. I want you to get in the habit of marking up your charts as you trade. I've got literally, there are hundreds, and I'll be surprised if I don't have in the thousands of charts now, going back, some of them are going back 20 years, where I'll go back and marked up a chart, and I then put them in a folder, and I call the folders charts to study. And some of these ones here, one of these ones, these are going back to 2015, just one of the folders there. And so I want to encourage you to do this, because there's a number of things that we really want to do. First of all, if we look at this chart here, and this is a very recent one, sweet spot trading, note the ATR. I've marked up various trades. So what we do is we start to mark up what I call the good, the bad, and the ugly. Now this does a number of things, traders, as we're trading. That is, it starts to, one, it keeps us busy. Okay, secondly, with the checklist of things I'm going to be recommending that you mark up on your charts, and for members I've put the Word document of this slide in the members area, so you can go to the members area and really you can use that Word document to put your own list together if you don't already have one. And so by marking up these charts here, you can, for an example here, we've got ascending and descending triangles, which I absolutely love. And one of the points we want to have here, by the way, traders, is a minimum of 3 touches, which is, we had way in excess of that, and that was a $100 move. So by marking up these patterns as you see them, it starts to make you more alert to or for pattern recognition. Okay, now of course we see a breakdown of a short side here. That isn't always the case, and quite often we'll see it'll run to the upside. But what it does, it starts to what's the word for it, make us more alert. It improves our pattern recognition skills, but also it keeps us constructively thinking as we trade. For an example here, we didn't have a break to the short side, but we had a break to the upside. And when you actually look at these triangles, or descending or ascending triangles, it's like price action here is coiling, by the way, and then finally you're going to get a good breakout. And so what you're doing as you're marking your charts up as you trade, and as I mentioned, the good, the bad, and the ugly, that is the good stuff as you trade, you can go back on a regular basis and review them, and I highly recommend you do that. So traders, what it does, it gives you an edge in your trading. Now we know that to succeed as traders we need an edge. The edge is pattern recognition. Virtually everything I teach in the Day Traders Fast Track program are patterns that appear on all markets and all time frames, geometric patterns that appear every day. And of course most patterns are what we call fractal in nature. That is, what appears on a tick chart will appear on a Renko or a time-based chart. But what we've got to do is keep ourselves busy, and we've got to teach ourselves so that in by reflex action, in a blink of an eye, we recognize these patterns. But it does a number of other things. It also keeps us focused whilst we're trading. So what's our edge? Your edge is going to be, you're going to become a master at trading patterns or recognizing patterns. Patterns repeat themselves in the markets each and every day. Day and swing traders can gain an edge over the majority of traders by learning to recognize these patterns, which most times turn into valid setups in a blink of an eye. That is, if you'll say trading in a number of markets, you need to be able to visually recognize a pattern very quickly, because sometimes they set up very quickly. So how do we train our brain to do this in a blink of an eye? In a blink of an eye we can look at a chart, and I actually say to members that if you're spending 3 or 4 minutes looking at a chart looking for a pattern or looking for a trade, it's not there. It should jump right out at you. So how do we also stay focused when we're trading? Well, we do that by having a checklist of things that we're going to be marking up on our charts. Now I showed you a couple of charts that have been marked up. Now I would recommend, if you're a newer trader or if you're not profitable as a trader yet, that you apply a lot more to your charts than what I do. That is, and we'll look at that, some of those key points or some of what I recommend you mark up in a moment. Now another reason you want to be actively marking up your charts, it makes it easy to do a count of your strategy results at the end of each day. That is say if you're looking at your T2, your slingshot trades, if you've got your T2 marked up on, say, the indicator on your stochastic, T2's marked up, you can go back and do a quick count at the end of each day. It just makes trading a lot easier to do that. Also, when you've got a trading idea, you mark them up as you see them appear on the charts. And after a period of time, when you go back at the end of each week and review your snapshots, or you review the trade stats, it just makes it a lot easier. Actually, I just thought of something here. Let me just get some. I'll just show you this. As I was just talking here, I just thought of something here that is just which I use. This is something for myself personally. And just as I was talking about this is what I use. So the market, for time frame, and the date. So as I mark up a trade, if it's relevant to me, I can then go back and just do a quick count. How many rule of ones? The T2s, T7s, the T9s, T10s, 34Bs, 89s, the T20s, T19s, so my divergence trades. So it just allows me to do a quick count. Now I'm just giving you ideas here, so find something that works for you. But what I want to do is to encourage you that you take comprehensive notes and that is the notes. I may as well quickly flick that back up again. So traders, this is what I've put in the members area. These are everything that's on the slides I'm showing you. You can download this as a Word document, make it your own. So getting back to this, so how do we keep up with trading ideas? Of course in our journals, but by typing notes on the charts. Now also open, as I mentioned earlier, actually I already spoke about this, open a charts to study folder. Very important. So here are some of the things that I'm going to recommend that you consider, particularly if you are not a profitable trader as yet. Okay, you want to really fully understand how channels and ascending descending triangles work. Now remember, with ascending with channels and triangles, you want to have at least a 3-touch rule. I want to really see 3 touches on the channel or on these triangles. You want to mark in your bull and bear flags. Of course, bull and bear flags only work in strong trending markets. So if you mark them up, but you can see what you're doing here, well hopefully I can get you to do this, because you'll start to develop the habit of noticing these patterns. When you mark them up, you can also start to develop a trust in how reliable a lot of these patterns are. So when you have these patterns appear, what you then do is you're using one of our standard entry techniques, such as say a T2. So if you've say got an ascending triangle, then you have a T2 or a T1 or a rule of 1 set up. It just it clarifies or proves up that pattern. Apply trend lines. Many traders would use fractals. Set up and mark in your micro trend lines. Just to quickly show you this, and I may as well just quickly, for an example, if you're new to my channel or new to my form of trading, a fractal point, and there's one just here. Let me just mark this up for you. So see that little dot there, that dot there, there's a dot there, there, here, there's one here, there's one there, there's one here, a little hard to see, there's one here. These are fractal points, and of course Bill Williams made fractal points quite famous, and he's written a number of books. One's called Profittunity, which is also the name of his company, Trading Chaos. And I like to draw trend lines using fractal points. So if you take that point there to that point there, for a trend line break, I've found that a fractal to fractal trend line break just makes it mathematically more reliable. So if we was to take this point here, here's another fractal point, I get a higher one right there, so I extend my point here. So when I get a close under there, I've had 1 2 3 4 touches of this trend line, and finally I get a break. Okay, I just like, it's just a personal rule, something I like to use. Over here I've got, I'm going off the screen here, I've got a point here, so there's my trend line break. And what I've just done, traders, while I'm on this screen here, I just thought I'd show you that CL trade I was in, that I was about to madly go to break even. And I actually got in this trade a little bit late, and this is a classic example of where I'm marking up these charts, and this is for just for my own commentary here. That is, I had what we call a T19 divergence trade here, higher high on price, nice divergence, and it come off. It was a nice winner. But I also had what we call a rule of 1 entry. Now rule of 1 entries, particularly on Renko, right, you'll get a lot of these after a divergence trade on the way down, but they're quite often a false entry. So here my comment was, wait for the ATR when coming off divergence to avoid these false signals. And I marked up down here, yes, so my entry, where traditionally I would have had an entry on this candle, and actually it would have been my entry would have been on the next candle, but anyway, but the point was my ATR did not confirm the entry. And down here I had a 89-200B here, and my entry would have been on this second candle, but because I was waiting for the ATR, my entry actually wouldn't have been until this candle here. But what it would have done is just kept me out of this losing trade. Now just why I'm on this, and I know we all love tips and ideas. So we can see the blue line, which is my trigger line. If I was trailing my stop, the trigger line trading Renko makes a great line here to be trailing. You can see we still would have been in this trade. So you can actually use either the trigger line or the ATR. Now if you don't have an ATR, you can be using a parabolic stop. You can use a form of moving averages, etc. Now by the way, just to remind you, it is during the Globex session, so we are looking at a Renko 2-tick custom Renko. So there's still already been some nice little trades. I've only just fired off one this morning because I was preparing the PowerPoint, but I saw this and I just couldn't help myself jumping in on this trade. But let's get back to the PowerPoint. Now I warned you we're going to jump around, but hopefully giving you ideas. Now if I'm throwing so much stuff at you, go back and just replay the video, and hopefully you're taking some notes from this. Trend line, so I like to use fractal. Now I will go back to that because I've had a lot of questions. What is a micro trend line? A micro trend line is one here. A micro trend line is a much smaller trend line, and that is where you see price action falls, it comes up, okay, and then it falls again. That's a very small trend line. That's what I call a micro trend line. Look, you could almost call that one there. Let me just show you. Where are we here? I'm just trying to find a micro trend line for you traders. Look, you could call this a micro trend line. So you've got a number of touch points here, so it's just a much smaller trend line, and I like to draw micro trend lines when I'm trading with the trend. Okay, so I could have drawn one from there to there, by the way. That would have been a break. So just, I know, hopefully it didn't confuse you, but that's what a micro trend line is. Now what you can also do to keep busy but also to train yourself is your fib retracements. So draw in a 38, 50, 61, and of course your 100%. Quite often when we get 100% pullback, we're going to get a change in market direction, but become used to drawing in your fib retracements. Many traders will only take a retracement trade if they've got a 50% pullback. I think you're going to find you'll miss out a lot of really good trend trades if you do that. But anyway, the point is here, mark in your fib retracements. Also, as you have a setup, mark in your indicator setups. Now that is in your lower windows. If we just look at this here, we've got here well, let me just see right here. I had a T2, so mark it in. So as you get various setups on your indicators, look, this is classic here, this is a 2D. Okay, mark it in. It makes it very easy to go back at the end of each day and to review your trade setups. What have we got here? Areas of consolidation and chop. Now when you see your EMAs is starting to, whatever, if you're assuming you use moving averages, when you start to see price action consolidate, EMAs become intertwined, etc., draw in a box. You can use your fractals for an example, because what we know is virtually every time you have an area of consolidation, you're going to have a great breakout. And so I've done a number of videos for members on trading consolidation or what to be aware of, and quite often, and you'll hear me repeat many times, quite often I'll have two losing trades in an area of consolidation. Then what I'll do is I'll sit it out and wait for a breakout. But when you do get a breakout, quite often you get a fantastic move. So when you're going into consolidation, don't be afraid of it. Mark them up. You want to know because that you've got an area of consolidation or chop, because quite often you'll get a really good move straight after that. So get ready for that breakout. And sorry about my squeaky chair there. I actually have what we call a standing desk, so sometimes I'll sit down and jump back up, but something I'd recommend as day traders, you consider having a desk that you stand at and just use a draftsman's chair, which just when you want to sit down, it's much higher. Anyway, another thing you want to be marking on your charts is waves 1, 2 and 3 and 4 and 5. Just remember that after you're getting 3 waves, you're probably getting closer to a potential market turn. So when you've got these waves, Okay, and for an example, Linda Rasky in a book, one of her books, and I just can't think of it right now, Street Smarts, that's it. She talks about a setup she calls Three Little Indians. It's after 3 waves you're more likely to get a turn. So when you're marking these up, it just makes it easier to remember to be looking for these. A T10, sorry, a T20, for members, you know that a T20 identifies a successful T20 in most cases will identify a new trend, and a T20-1 is the first trade, first trend trade after a T20. You want to be marking those up, because the earlier you enter a trade once the new trend is identified, these are the ones you can get some really good runners with. So it's very, very important. You want to mark up when you've got a sweet spot. Now, as a reminder, traders, and I'll tell non-members this, a sweet spot is where you have all of your EMAs confirming a trend. Now if we look at this here on my anchor chart over here, okay, we can see here that my EMAs are what we call fanning out, and I've got a fanning of the EMAs here on my entry chart. If I go and by the way, if I also use tick charts, I just don't use Renko. I just thought I'd show members this, that and non-members, that you might be using a tick chart. Now just one thing I will say, we are in the Globex session. During the Globex session, if you're going to use a tick chart, you may consider using an 89 tick rather than a 233, because a 233, generally speaking, is just a little slow. For an example, the market, the Globex session's been open 3 hours, and this is 3 hours of trading action, where on our Renko there's been 4 or 5 really good trading opportunities, where there's just been a couple on a 233 tick. So you want to change your time frames. So the point was, just getting back to this here, was to make sure is to type that in. So what I'd be typing in here, if I was new, or until you get used to recognizing this as a pattern, type in sweet spot. Okay, sweet spot means you've got a fanning here and you've got a fanning there. Getting back, oops, here we've got marking when you got higher highs and higher lows, which means what? I've got an uptrend. Or marking you're getting lower lows with lower highs, I'm in a downtrend. If you remember, you're going to be typing, if you've got a T1, a T2, a T7, with trend or counter trend, a rule of 1, a rule of 2, a T10, T19, or a V trade, type it in as you're trading it. That makes it very easy for you to go back and to do a count. Another little thing that I just want to show you is this, and this is very common, dealing with hundreds now of full-time traders as well. It's something that I've got them all on and staying focused, is this, is you can go online and you can get a countdown clock, because a lot of people have trouble, and hopefully this comes up on the recording. So you can, this one for me is set to 30 minutes. When you're doing research and development work, or going back and doing stats, it's very easy, because it's boring to get distracted. So what, just set a rule of making it maybe 15 minutes or 30 minutes works for me, that if I'm doing R&D work, or if I've got to type up, or I'm answering emails, or whatever the boring thing may be, I turn the timer on. Okay, and it means then for the next 30 minutes I've got to be 110% focused on that project. All right, just a little tip that I'd recommend you consider is go online, just get the countdown timer. There's a whole lot of different types of one. It just makes it easier in staying focused. The maximum move you've achieved. Now going back to this chart here, this trade here, now that was only 6 ticks. Now here you can see I easily would have been able to achieve 12 ticks. Now what you can't see is a trade book I've got down here separately, where I keep this manually in a separate trade book. But mark it up on your charts, because it keeps you busy. And so we can actually see here, we still, using the trigger line, would be in this trade. We haven't got a clear close under the trigger line, and even my ATR is keeping me in at this stage. All right, now notice here this yellow line here, by the way, is our floor pivot. I can tell you now we're about to get a turning point. And for members, here is a 1D setting up. Okay, so you've got a 1D setting up as well. So I have to admit, if I was trailing here, I would be taking profits right now before I even get a close, because this has been a great, and by the way, when you're getting 12-15 ticks in a move, if you're after say $300 a day per contract, you just need 2 of those in a day and you're there. So and just on that point, traders, if you're trading multiple contracts, it's always nice to take a number of contracts off at a fixed target, move to break even, and let the others run. But that's another topic that we cover separately. Back to the PowerPoint. Okay, so the maximum move you would have achieved plus the ideal stop. Now, if you're in a fast moving market, you may discover that you need to have larger stops. If you're, say, and let's go back to this chart again, if you're, say, using an ATR, you may find that rather than tucking your stop under your closest swing low or above your swing high, you may be able to just tuck it 1 tick under your ATR stop and flip, or under your parabolic stop and reverse. Now what you'll usually find is your stop maybe 1 or 2 ticks smaller. Something for you to think about. Just wanted to throw that in. Now, marking your pivot bounces. When you've got angulation or divergence, double tops, double bottom, mark them up. Is there any other patterns, anything else that you'd also want to mark up on your charts? Now, as I mentioned, and traders, there is a checklist which will keep these. Sorry, let me take that back. I put these on a Word document so you can go and adjust, but of course in the members area, and as members, you know I've got extensive trade checklists. Now something else I just want to show you on this point. If you remember watching this, you've seen this slide many times. If you're a new trader or trading hasn't been kind up to you, or maybe you're just looking at joining us, this is what I recommend. Get plastic sleeve folders, type up the lists that work for you, and this is exactly what I have in front of me. So I'll have a couple of folders that I can easily flip just with trading patterns. Now as I'm trading, I'll just be looking at the charts and I'll be flipping these and just reviewing patterns. Okay, so as a visual reminder, my rules and any highlighted points are there, so I can be flipping, have all my rules. For an example, I'll have down here, do I have a T1? Do I have a T2? Do I have a rule of 1? And I'm just constantly reminding myself, and of course I'm taking notes. Okay, so as I'm trading, and I've got a column rule down one side, so if there's anything special I'll highlight it, and so I'm taking notes as I trade. That's how I do it. Now I know for a lot of experienced traders this is really basic stuff, but if you get one idea, that's what these training sessions are all about. It's just giving you that one idea that may make a difference when it comes to trading. So traders, in finishing off this video, I want you to mark up your charts, because it's going to help you sharpen your skills when it comes to pattern recognition, marking your trend lines, marking your fractal breaks, marking when you're in a period of an era of consolidation. It keeps you sharp, it keeps you focused, and it stops your mind from wandering as much, which then leads to boredom, which quite often means leads to looking for trades that aren't even there. But also it's going to allow you to keep your stats, because when you've got accurate trading stats, it gives you a lot more confidence as traders. Now for an example, yesterday on CL, let me just quickly go back to yesterday. There were the way I was trading, there were 18 setups and only 3 losses during the Globex session. Okay, when you start getting those and by the way, traders, that was for a pivot bounce, an 89B, rule of 1, T19, 34B, 34B, T2, rule of 1, 2D, T10, T10, T7, 1D, 80. When you keep your stats like that and the trade setups, etc., All right, it keeps you focused, but it gives you so much more confidence as traders. So as we close off, traders, if you're not already a member, for $197 you get all of my resources, all of my setups. As I mentioned, there's actually 300 videos. No, you don't have to watch them all. They're all labeled, and there's now, I think, about 15 different setups that I teach you. You focus on a couple, I tell you which ones to focus on, and you build from there. So traders and members, just as a reminder, the book link is now in the members area. Thank you, traders.